And thanks to everyone for coming out. Great turnout, obviously, this weekend. And after listening to Brian talk earlier today, I know I'm a little bit more excited about this year with what's to come. And last year for Integra was a really big year. We hit a lot of milestones in terms of updating our resource, putting out our first economic study, and also adding the former governor of Idaho as of 1 year ago to our board as we sort of start to navigate that permitting process. So we'll just jump in here. So I guess as Gwen referred to a little while ago, we're a little bit over sort of 2 years as the stewards of the Delamar project that we acquired from Kinross back in 17. It's been a busy 2 years for us as we've taken this project from one that was historically run from the 70s to the late 90s as an open pit operation, and then was shut down due to poor economics and just kind of sat in Kinross's in their filing cabinet for a number of years. So we were able to initially come out and create a 3.5 million ounce inferred resource, and then with the work that we did in 2018 and the first part of 19, able to convert 90% of that inferred resource to M&I, and then also add about 500,000 ounces to that now to sit at about 4.4 million ounces. And then again, obviously with that PEA coming out, outlining a 10-year production profile of about 125,000 ounces a year. So like I say, it's been a busy two and a bit years for us as we've moved this into the development stage. I think this year is going to be a really exciting year for us again for some different reasons. I think some of the three key takeaways to watch for Integra this year are going to be the addition of high grade to the story. We were able to step into a low-grade resource, as I mentioned, of about 3.5 million ounces, so it made pretty good sense to follow up on that straight out of the gate. But if some of you may remember, the other period of production on this project was going back a number of years, 1860s around 1910, and they were underground mining. Basically, families would just sort of mine, each get a vein and sort of go into the side of the mountain with adits and sort of follow these veins, and they're averaging 30 grams per ton and using a 15 gram per ton cutoff. So we've got a whole host of targets that are largely untested that we'll start to get into this year. You saw a little snippet of that with War Eagle results, which was another asset we made that's about 11 kilometers as a crow flies from Delamar. We were able to hit some nice high-grade hits on that in December, and some of the met drilling that we were doing at Florida Mountain actually turned up some more somewhat surprising high-grade there as well. So I think that's one of the big key takeaways for us this year, is that you're going to see this become sort of a two-headed beast, if you will, where you'll start to see high-grade get added into the story. And then another big one is just with the shallow step-out drill holes that we have planned for this year at Delamar and Florida Mountain, we anticipate we should be able to add easily 500,000 ounces, hopefully more, to the story this year, putting us at somewhere around 5 million ounces on the whole. And then the third thing, and we'll look at the PEA that we put out here in a couple minutes to give some of you a reminder and maybe an introduction for some of you. That was basically, we wanted to show something to the market that was doable for us as a team to put into production, and also something that appeals to a mid-tier producer. But realistically, we only use the heap leachable material in this PEA thus far, as you'll see, so the oxide and the transitional material. We didn't include the sulfide. We hadn't done enough met work on that to really have a full understanding of how much of that will be heap leachable and how much of that will have to be turned into a shipping concentrate. So we're updating that. We've been working on that metallurgy since last September, basically. So probably, I would say, to be safe, probably September of this year, you'll see a PEA update. That's going to be more for the majors to take a look at, because with adding another 2 million ounces to that production profile in the PEA study, we should be in the neighborhood of a 250,000 ounce a year producer, and the majors don't really look at things unless you're over 200,000 ounces a year. So I'd say those are probably three of the kind of key takeaways. So I'll just jump in a little further here. Some of the other key points here are, when we first started off, our IPO was at 85 cents with no warrants. All the institutional investors that we had made money for at Integra Gold were unable to participate, because most of them have one or two criteria, being you either have to be more than 100 million market cap or be a development stage company. So that was a tough financing, but since then now we're just under 70% institutionally held. Same team from Integra Gold, of course, except for the technical side of the team there. Most of the people that we hired to help us build the Lamaque mine that went into production last year in the sort of first half of the year just stayed on and worked for Eldorado. And I don't know if any of you saw, but they had some really nice discovery on our old asset last week that they announced with some nice double-digit grade and over double-digit meters. So excellent news there. So same team, Tim Arnold, you'll recognize him maybe from Pershing Gold, Nevada Copper, 35 years of experience in Western Canada in open pit and underground operations. So we're going to start to build out that team now, as we did with Integra Gold, as we start to move this towards ultimately a production decision down the road. Board of directors, that's a big difference from Integra Gold. We had a good board, but arguably this is a much stronger board. David Arm, co-founder of Sandstorm, Randall Oliphant. The gentleman on the end there, Butch Otter, a big win for us, almost as important as having that PEA that came out, as well as the resource update as we start to navigate the permitting process. He's a real key win for us, adding him to our team. Capitalization ownership, you're looking at, right now we're at about $1.20, about 135-40 million market cap on the company. 0 warrants. We've never done a warrant with any of our financings. We wanted to make sure this time around versus Integra Gold, we had a clean slate on that front. We have 34 million in capital. When you look at our ownership structure, management has about 10% coming off the win from Integra Gold. We put in over 2 million of our own money to get this kind of started. And then you've got Coeur Mining made a strategic investment into us back at the early part of December, at the end of last year. Ross Beatty, Pierre Lassonde, a lot of big institutional names that you'd recognize are supporting the projects. We've never had a problem raising capital and don't expect to have that problem going forward. Talked a little bit about this already, and seeing as we only have about 3.5 minutes, I'm just going to skip through to some of the more important stuff here. So Idaho, very mining friendly. A lot of people think Idaho is heading in the direction of becoming the next Nevada. I know Midas has had some issues and some challenges, and that team's worked very hard to get where they are. We're in a very different part of Idaho. We're semi-arid, we're up at elevation. And this gentleman you see here is the current governor. He was Butch Otter, our board member, the ex-governor. That was his protege. So he's come in with the same mindset. Recently, they looked at all the rules and regulations for business in Idaho, which is 8,500 pages last year towards the end of the year, and they basically modified or deleted 75% of that, as they want to make sure that rules and regulations aren't a barrier to investment into the state. So excellent place to be located. We've talked a little bit about the resource there in terms of what we have. It's very sizable. I think one of the macro views on the sector on the whole, between Australia, Canada, and the U.S., which are considered usually to be the top tier jurisdiction to be operating in and investing in from your perspective, you're looking at there's only 9 projects in the U.S. that have 3 million ounces or more of gold equivalent. So these projects are pretty rare, and I think we all know that when markets heat up, that's when M&A usually tends to heat up the most. So there's a scarcity of these types of assets. So the PEA that we put out, again, this is something that we wanted to show the market that we were capable of raising. It's about 200 million Canadian to get this into production. With our last project over a 5-year period in the worst bear market on record, we raised over $150 million. This is something that we're capable of putting into production ourselves. I don't think that we'll still be the stewards of this project due to the scarcity of these types of assets, but when you look at the numbers, 1.8 million ounces went into this, and 125,000 ounces over 10 years, 472 million NPV with a 5% discount in Canadian dollars and a 43% after-tax IRR. And that's all based on $1,350 gold and $1,690 silver. So even at being a little more conservative at $1,500 in the gold price, this is about a 55% after-tax IRR, and the all-in sustaining cost is $742. So again, that's where the PEA update that'll be coming out in September of this year is going to change things. Obviously, when you look at bumping the production from 125,000 ounces a year to 250, things are going to change in these numbers. I know the CapEx would probably be in the neighborhood of a double from there, but the NPV is also going to go up, and your all-in sustaining costs will go up a little bit as well too. So, but again, so there's optionality with this project. When you look at what we've kind of got here in terms of the production profile, it's a 27,000 ton per day heap leach operation, strong recoveries in the metallurgy, and then the mill is 2,000 ton per day. And as my time's winding down, I just want to leave you with what the impact on the numbers would be for us to be able to start adding high grade. We don't need a whole heck of a lot of high grade to really juice the economics on the project. We start adding a few pockets of a few 100,000 ounces here of high grade, anywhere from 5 to 10 gram per ton. And what that allows us to do is go to the mill, which is running 1 gram sort of low grade material through the mill, and then say take whatever the number be, 500 or 750 ton per day of that out of there, and substitute that with 5 to 10 gram material, and you're looking at a really big boost on your economics. As I'm wrapping up here, I'll just leave you with the 3 highlights again. So we'll be adding high grade to the story this year. I don't know if it'll be in time to be included in the PEA update, which is also another big key catalyst for us this year. And we also anticipate growing the resource to around 5 million ounces on the low-grade front this year, and we see 6 million ounces in sight within about 18 to 24 months. The booth's right by the front there if anyone wants to come and chat after. Thanks for your time.